the beauty of this place is that the macro is that the consumer credit is very low in the economy, right? When you have the consumer credit penetration 20 to 30%, 20-25%, that is, so you have a long runway for consumer credit to pick up, right? People aspirations have only gone up. People aspirations haven't come down. So if one has to be operating like a Western world in times to come, there's a long way to go. This has to double, triple to be at that kind of a level from a consumer credit penetration.
Sure.
So there's a long way from that sense.
I'm surprised that, I mean, there's also a point that your entity is being able to do it very well. But if you look deeper into the system, there are consumer durable companies which are telling us that some demand has, maybe you are mining your clients and your customers very well for the penetration part. I want to understand with you, there is a thought in the market about your bank, which has seen phenomenal decades of 20% plus compounding. And now the numbers show that at least the business growth on the top line front is kind of hovering around the 18% kind of a number. Whereas your NIM growth is very healthy 24% and many other parameters are upwards of 20%. So are we now seeing some moderation, and for foreseeable future, that's the new normal we are talking about?
See, if you go back, you have to go back in history to see what is the kind of rate of growth that we have experienced. You can look at any block of a 3 years or a 5-year blocks, right? A year or a quarter wouldn't tell you a trend, but if you look for a longer period, say 2012 to 17 as a 5-year block, 2.3, 2.4 times, essentially high teens to 20. That's the rate of growth, right? Assets or deposits. So you go back to 17 to 22, another block of 5 years, say 2.3, 2.4 times, 18-20%. Or if you look at a recent time period of a year or so, this is a similar type of a 19-20% type of growth. So that's the kind of the velocity at which we are moving currently is faster than the velocity at which we were moving when we were 7 years, 8 years ago. So the larger we have got, the faster our velocity is.
So you will say that the best way to analyze the growth and velocity is actually look at a 5-year picture, not a yearly picture. Perhaps they'll mask a lot of growth there.
Yearly is important, but over a longer period is where you deliver a change, deliver the difference.
Okay. So before I come on the retail part of the loan book, I want to understand how is the corporate end of the loan book behaving in terms of their behavior towards fresh credit, be it your SME kind of book, rural book, and of course the corporates. Because the fact of the matter is that rates in the system have edged higher, and from now also it likely to edge higher. So what kind of conversations are you having?
See, the larger the corporates, they come with the rate view, because professionally managed money managers who are there in the corporates, so they have quite a view of where the market is heading, the rates are heading, and so there's intense discussions that will happen in terms of the credit. But working capital is something, as I said, is inevitable and people have to finance. And from a project financing, it takes time, over a period of a longer term it comes. But good demand on that front, and people, it is not as interest rate sensitive from a working capital credit offtake, because ability to pass on is important, and that happens at both the SME level as well as on the wholesale level. People are able to pass it on. So that's, and then when they pass it on, does it impact the consumer spending at the end? It is reflected in the price of the goods and services at the end. Is it reflected there? It is. Does it matter? Does it matter to the overall economic growth? It doesn't. India is a high interest rate country for most part, right? Operating at a 6% to 8% kind of an interest rate is not something that is new in the country. Over a longer period of time, that's something we have seen that. And over this kind of period during those interest rate regime, the growth rate has also been very robust.
Sure.
And so that's part of how the economy has been functioning very well.
You have a very large part of your loan book now on the semi-urban and rural side as well. And there's again and again this argument coming on the table that there's a K-shaped recovery in the economy. Perhaps the lower end Inflation and higher rates both have been pressurizing the lower end of the customer or consumer. What are your thoughts on rural and semi-urban smaller ticket?
See, it is absolutely right that the K-shaped recovery is something that is visible and one sees that. But our banking customer target segment is above certain customer segment level. So we are not experiencing directly that particular segment which is impacted. It is true that inflation, disposable incomes are less at the lower levels. So that is part of the impact which is there. And coming out of the COVID, the most impacted customer segment from COVID was that segment, where the jobs were less, or daily earners or the weekly earners, so the impacted people who are there. So now coming out of that, whereas even in the semi-urban and rural that you alluded to, where 60% of the country is, our target segment is not all of that 60% of that rural India which is there. We are interested in the top 20-30% of that 60%. That is our target segment, which means the top end of that segment in the rural, semi-urban and rural, where they continue to have good disposable incomes and cash flows.
So we saw that in the quarter gone by, your interest income, there was a 13-quarter high kind of growth. And now people are also, though a lot of shareholders who have logged in, because there was a very long wait also, the stock did not do very well in numbers. So people who are patient are getting rewarded now. But they're also kind of little worried, can this growth rate sustain? You see any reason to of that question or worry arising, or up till now the visibility is that it may sustain?
See the visibility in terms of what I would, rather than look forward to say where it is, I will look backwards, is to say that as a bank we have consistently performed in terms of having a balance of various products across segments, right? That suits the products are there that suits the economic growth across various segments. Depending on whichever segment is growing, we use that product at that particular time. For example, 2020, 21, 22, when we clamped down on our retail offering due to credit concerns of what's happening in the market and we don't know, shrank there. But there were opportunities on the wholesale side, on the SME side, which we grew. So we have products across to use that and run. And as I mentioned earlier, the velocity at which we are growing, that is very important to look at. And we are positioning for, if anything, growth faster to capture the opportunities which are still enormously out there.
I read that you are aiming at 1,200, 1,300 kind of branches every year from here on. I want to understand from you, what are the current, so if you look at the book size of your branches overall, how much are legacy branches? How much are the branches which are newly opened, which will give you 2-3 years ahead the fruits later? And which are the ones which are turning, where the fruits are becoming ripe to be harvested?
Yeah. So I'll tell you, out of our branches, a little more than, call it about 60% of our branches are less than 10 years, right? Why is 10 such an important thing to think about, right? When a branch is opened, it takes, call it 2 years, 2.5 years to break even. Then it builds to a certain level in 5 years' time, right? Then between 5 and 10 years' time, it starts to bring in that multiplier effect. So it goes to 5 to 10 years, it goes to 3x of what it was in the first 5 years. So you have a 3 multiplier there. Once it gets past the 10 years, it gets to a multiplier of 10. So the more the vintage of the branch, the better the penetration in that local base and the deposit base that it can bring in. So that's part of what, and the new branches that we are bringing in are filling that pipeline, as the 60% of the branches that are less than 10 years are progressing and moving in the scale up. We are trying to fill the front end so that this process continues for the next 5, 10, 20 years.
Sure. So you have enough visibility of raw material also, which is deposit base.
At the end of the day, our deposit market share is slightly under 10%. Long runway to go to get much more market share on
So
that.
while you are very cognizant of the fact that in India, as much of feet on ground strategy works, as much the focus on tech. And if we break down your tech into 2 parts, one is a lot of tech related offerings, the front end. There have been question marks raised on the back end to a certain extent. I mean, just last week also we did have outage for an hour or two. How are you speedily moving? Because your data on the app downloads show very fast growth, but then these niggling issues are also erupting again and again. If you could help us.
On the front-end technology, which is what you alluded to, people are looking at it, a lot of clicks or hits that happen. Over a period of last few years, we have made significant changes and improvements in new technologies that have gone in. So think about the Smart Hub Vyapar, which is out there for the small merchants which are there. We have about 4 million merchants signed up in our merchant business. We are adding 80,000-90,000 per month right now into the Smart Hub Vyapar platform, which is significantly enhancing the value proposition for those merchants, right? So that's part of one that is happening, and it's happening very well at that level. Another kind of a front end is also the Customer Experience Hub, which is there. The Customer Experience Hub was launched 3-4 months ago. Is receiving excellent accolades in terms of the customers' ability to solve what they want, an omni-channel experience so that customer doesn't need to repeat the things that they have been trying to, because it captures and it stores and it hands off to the next person very well, and across channel, a brand channel, a VRM channel, or a sales and relationship channel, and so on. So across channels, it is connected. And we are rolling it out to further towns and across various languages so that pan-India we cover through this Customer Experience Hub. That's another thing. The new PayZapp 2.0, is a one-of-a-kind that has been developed, and it is progressively getting rolled out now as we speak. We have enormous plans for that, and it's a kind of an application that is making a big deal of a difference. Progressive rollout is the strategy that we have followed on that, and it is going through that aspect of it. In the recent times, we have also introduced the Auto First program. Like if you think about 7 years ago, we had this 10-second personal loan. Yeah. Again, one of a kind. After 7 years, you hardly will see anywhere that it is so popular. It's quite popular with us. So this Auto Express, Auto First that we have is a 30-minute turnaround time, end-to-end digital auto loan. So these are some of those on the front end. We have been doing these things. Now come to the back end, right? A lot of things have been addressed from a resiliency, availability, and our ability to scale, right? At the rate of growth that we are having, we need to have a natural process of scaling these things up, which it has served a lot of purpose and brought us to a good place on that front. The time has come, we need to go into the next generation. See, the legacy platforms in the banks generally are at least 5-10 years behind from a technology adoption point of view, right? For various reasons. Indian banks and global banks behind in terms of technology adoption, which is what we are trying to leapfrog into the new age, right? New tools, and more important is to take this on the cloud, right? Sure. The legacy platforms are not cloud capable. Right? Now, we're trying to get into new applications. So that means redoing our entire backend with the new age developing people with the mindset to enable. It's a 3-4 year journey that module by module we want to take it into microservices, put it on containers, and take it to cloud. Sure. And again, from the cloud, a multi-cloud type of strategy so that we are able to have redundancies even within cloud. So that's a long drawn. We are in the process of developing those.
Right. And lastly, I want to understand from you once again, Srini, we are progressing on the merger. We just got a nod also from the NCLT. Talk to us about, the strategy which the combined entity will like to exploit on the business front. Up till now, you have spoken a lot about liability-led strategy. How are the benefits of mortgage-led strategy also kick in? And when we start mining the customers on both the side in the combined entity?
Yeah. No, very important. See, mortgage is an important product for a household, right? Now, when you have a mortgage product being given to a customer, the engagement time with an individual and typically with a family is 30 to 45 minutes. Okay. As opposed to another product which could be 2 minutes, 3 minutes, 5 minutes. This is a longer drawn, right? 30, 45 minutes. So you have the kind of an attention of the customer. So that at mortgage, and you get lots of documentation in the process of mortgage. And if you're able to give a mortgage, we are now trying to work in a process in which a savings account is a process that we want to have along with the mortgage product. So if you get a mortgage, you need to have a savings account with that. So you have that in a conjoint manner rather than go afterwards and get a savings account. So it's joint
in
together.
layman terms, just to understand the scope of Synergies, how many of your banking clients or account holders would be doing a lot of other business with entities outside? And if you must have estimated internally that how many of the mortgage clients or HDFC Limited would be doing the banking relationship outside? So if they could come together.
Yeah, that is part of the synergy opportunity. See, in our bank, we have mortgage penetration less than 2% of our customer base. Very meager. And we see that more than 5% of our customer base have mortgages outside. That's because of the reach, because two organizations, HDFC Limited and HDFC Bank, distribution strength is different.
Sure.
And so thereby, people have gone somewhere else where closer to their home or closer to their place, and they've taken that. So the part of the synergy opportunity is that. So we capture our customers' needs ourselves and not let it go out, right? That's one of the important. Then the other aspect of this is, as we give mortgages, giving a credit card should be an easier process to do, right? Because you are evaluating a person's credit for a mortgage, you need to get the credit card in the hand. So your card becomes the primary card for them to use, right? A consumer durable, most of the homes in India need consumer durable. It's not pre-fitted for most part, not in the common, the middle class. So we are one of the largest financiers of that from a bank financing point of view. So we are making that also into a package offering where we give that. Right? A home necessitates protection, life protection, so that the family is protected and is able to live in the home if, God forbid, something were to happen. So we do have on the shelf a life protection, a general protection, and all of that. So these are all the products that are getting tuned to be offered with the mortgage as the fulcrum around which these products are getting in there. So these are the synergies that, and the last you asked about is HDFC Limited customers. Yes, about 70% of HDFC Limited customers do not have banking relationship with us. So we need their liability relationships here. So that's part of the synergy process that we are trying to tap into to see how we get them onboarded here.